Hi Arvind, welcome to the show. How are you?
Very good, very good. How are you doing?
We're doing good. Good afternoon. Your first take on the budget.
So the government has stuck to its priorities, what they laid out last in the last budget, which is to focus and prioritize on growth and boost growth over fiscal consolidation. I think they've clearly gone on that path, and this was required. In India, eventually growth matters. Right? Growth tends to solve a lot of our macro problems of you know, incomes and per capita incomes, poverty, ability to serve, improve the infrastructure. Prioritizing growth was important, especially if you look at the background pre-pandemic and then 2 years of pandemic. There was a lot of impact of the economy faced. So from that perspective, it was good to see that the government is focusing on growth and trying to boost growth. In that, the increase in capital expenditure from what was 5.5 trillion were budgeted for FY22 to 7.5 trillion for FY24, 2 trillion, 2 lakh crore increase. That's a massive increase. So if the central and state government, is able to implement and spend these amounts in a timely manner, because, state capacity is always limited. You can announce spending, but if you're not able to implement it and spend it in a timely manner, it does not happen. So if they're able to do it, then it could have a multiplier impact in the economy. And we've been talking about the fact that India has a lot of tailwinds. Corporate balances are better, bank balances have improved, exports have picked up, capital inflows have been very strong. Foreign the real estate activity has picked up. And if you look at in this background and this increase in government and state government and public sector capex, we believe that what we are in the cusp of a sustained economic revival, I think that should continue. This should be able to revive private capex also on the back of government capex. And over the medium term, I think we should expect GDP growth to remain higher than the previous estimates of about 6%, should be higher than that, which basically bodes well for Indian equities. That if the Indian GDP, real GDP and nominal GDP is able to increase on the back of this capex prioritized budget, this should be positive for the Indian equity. If you look at from the bond market perspective, the fact that the government is prioritizing growth, which would mean that what we call as fiscal consolidation, fiscal deficit going down, that will be pushed back, that will be slower. And you're already seeing that impact in the bond market. And, in the backdrop of high oil prices, high global inflation, a very hawkish, what we call hawkish US Fed, and the pressure on the RBI to tighten rates, we would expect bond yields across the curve to increase by about 20 to 30 basis points, or for now at least. And then as we go ahead and see what inflation takes place, it might be more. The RBI also will have to start hiking rates now. Given that now growth is a government's priority and RBI does not no longer need to support growth, they should be hiking rates, and we will expect at least 100 basis point increase in the repo rate in FY23.
But do you think the numbers are pretty realistic as far as GDP and deficits are concerned, or disinvestment numbers are concerned? The overall,
I think the numbers are realistic. Maybe in fact the revenue numbers might actually be higher than what they're budgeted. If the growth momentum sustains, as we have seen this year, where tax revenue, GST, corporate income tax, everything increased, like customs, we should expect a similar trend if the growth sustains. Right? So maybe the revenue estimates will be slightly higher. So from a broader number looks credible. The thing is, how do they spend it? Like, can they spend over the entire year and not bunch it up in the end? Because only when they do that now will the benefit of growth get passed on to the economy, as we call it in the trickle down.
any view, your views, especially, with respect to agriculture and healthcare as a segment, were you expecting a little bit more, especially for fertilizer as a industry?
Not specifically fertilizer, but I'll talk about in a broader sense, and that's where our disappointment was from this budget. I mean, there was no mention of rural employment. There was no mention of the impact on the informal enterprises, informal economy. Right? We know that there is a fairly large divide between the formal and informal economy. And that's where we were disappointed, where although growth should be prioritized and we recognize that, there will be a trickle down of growth and everybody will benefit. But given what the individual consumer, the individual and informal enterprise have gone through, think about all that, right? Lost livelihoods, lower incomes, spending on health and health costs in a pandemic. They've taken higher oil price. There's been higher food prices, higher taxation on income and GST. All that put together, we would have expected a balance between capex spending, which is supply, and some form of income support or a lower tax burden for the individual or the informal enterprise or the household enterprise. I think that was missing, and I think that was a big disappointment from our perspective.
Right. Some positive announcements on the digital currency side and clarity on digital taxation, and also deep technology, drone as a technology to be used for agriculture. So to continue support to startups. I think those were some of the positives. What's your view on this?
So the fact that they have chosen to tax digital assets, and I'm reading digital assets as cryptocurrency, is a good thing. So that's not banning; they're allowing the market to function, but it's a tax and there's no deduction. So that's a good thing. On the digital currency, the fact that they've announced that it will be released in FY23, there's a timeline to it, right? Which means that the government and the RBI are reasonably on board in terms of what form, shape, regulation, what mechanism the digital currency should come up. And that's a good thing. It depends on if tier 1 or tier 2, in the sense that does the central bank issue a digital currency directly to the individual, directly to the citizen, or does it get intermediated through a banking system? We will need to wait and know for that. I think there are pros and cons of both their mechanisms. But the fact that they've announced that it will be released this year, it's a good thing. And any measure that the government and the regulator take, it spawns activity across the private segments also, right? There will be innovations that the private individuals and private companies will do around the digital currency. Just as we saw with UPI, which is now completely run by private entities, right? Yeah. So something similar should happen, and that's good to see.
Any announcement for MSME?
There were announcements. I mean, the increase in that credit guarantee scheme from initially 3 lakh crore to 4.5 lakh crore to 5 lakh crore. Those were good things. A lot of the capex that the government is doing should flow into the MSME segment. So there are enough spending and opportunities for the MSME, but we would have still had some amount of a direct, because the MSME is a household entity, right? Most of the MSMEs are reasonably small. They've taken a big chunk of impact of the economy of the pandemic. I think if they would have addressed that in a slightly more broader manner, some direct income support, some direct funding support, or a lower tax burden for a specific for a time period, I think that would have given a better balance to the economy going forward. Because think about inflation also, right? I mean, we are in a situation where inflation is rising globally and domestically, and in the sense that if you look at the government support for domestic manufacturing, they've increased import duty, which would mean that the Indian domestic economy will also face higher cost pressures. Which will mean it will be even more difficult for a small, medium enterprise to manage that cost pressure. Large companies should be able to manage it. Small. So when you think of all those things, we would have expected some lower tax burden, some income support, some direct benefit.
Okay. Exciting time for defense and telecom as a segment. 5G rollout to happen in times to come, and 68% of the R&D budget in defense is earmarked for Made in India.
Yeah, that goes with the trend that this government has been doing in terms of boosting and encouraging domestic manufacturing, domestic production. So I think they've also announced a PLI for the 5G rollout in terms of equipment, which is again a good, it's a good boost. So there I think the government is making the right policies, making the right choices to boost domestic production, domestic manufacturing. I think it's good to see.
Right. And Gati Shakti plan also coming up, so helping infrastructure as a sector. Power and infrastructure, I think there won't be much to complain.
Yes, I mean, I think they were very clear. I think much of the initial focus was on Gati Shakti, right, in terms of the different aspects, the 7 different aspects of Gati Shakti. And there was, of course, the budget announcement was short in terms of numbers. I mean, it was all announcement, and we have to now peer through the document to see announcements and the actual money behind it, right? And what is the source of that money. That's always the case with any budget announcement. But you know, the general focus on infra and the general focus on capex and infra. So that's good to see. That will help keep the growth momentum. Maybe they could have announced something more specific on education and health. I know they announced on the TV, but soft infra, which is education and health. Maybe some more concrete steps in terms of spending and improving the quality of both education and health services across the country. But maybe then that may not come in the budget that can be. But those are the missing aspects.
On a scale of 1 to 10, what would be your rating?
In terms of boosting growth, I would say 8 or 9. But in terms of lack of balance, I would say 4. So it's a mixed budget. I mean, there was this need for the balance to come about between boosting supply, which is capex and industry, and supporting individuals and income. I think that balance was missing. So overall, maybe about 6 or 7.
Right. And I think markets were pretty, upbeat 2 days for past 2 sessions. I think you see some consolidation in times to go, or this will be.
It is from a medium-term perspective. As I said, it is a good budget for the equity market. Given the spending, the large listed, medium, small listed entities will keep getting benefit over the unlisted informal space, right? So that's good for the stock indexes and equity market in general. The amount of spending that also that they've announced, you will expect a lot of the large companies and medium companies to be able to benefit out of this. So that's why you see the momentum in equity. The worry is inflation and bonds. So if bond yields spike way too much, then that will kind of in the short term at least will have some impact on that.
But that news would have been already been incorporated, or I mean everybody knows about it. So that would have been discounted by now, especially the Fed announcements. So I don't think it would be a shocker, right, on the street?
The shocker for India could be oil prices. It's already $90.
Yeah.
In the short term, if it goes to 120, which is what people are expecting, that has a significant short term impact, and that will have impact both on the bond market, the currency, and in the equity market in the short term. So there's a short term story and there's a medium long term story. The medium long term story seems good. There is a lot of tailwind. The government is focusing on growth, boosting infrastructure, and capex, which tends to have long term, significance in the long term growth. But there are these short term impacts of either inflation and oil prices, or just a lack of demand and lack of support for individuals.
Right. So for final comments on LIC IPO. Any views?
I don't think I'll be able to comment. I hope it. I mean, I think she was very clear, the finance minister, that it is going to happen this year. So I think it's required from a fiscal perspective in terms of balancing the revenues and the expenditure. But when it happens, at what valuation? Difficult to comment on that.
Right. Arvind, it's always a pleasure talking to you. Very crisp to the point, and very straightforward. And we look forward to having you more on times to come.
Thank you so much. Always a pleasure to speak to you and your.
Thank you.